morning and welcome. It's the Friday edition of Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago.
Good morning. I am BC Adebayo.
Well, let's tee off from Friday Business Brief as commercial and industrial businesses will soon begin to get measurement of impact of economic programs on their businesses as the National Bureau of Statistics plans to begin the national census of commercial and industrial businesses. The move is aimed at monitoring and evaluating the impact of the current government's economic blueprint, the economic recovery and growth plan, and the sustainable development goals. How the Statistician General of the Federation and Chief Executive of the Nigerian Bureau of Statistics, Mr. Yemi Kale, has been sensitizing the public on this in order to create awareness about the census so as to prepare stakeholders towards the type of information that they would be expected to provide. The census would also assist to determine the structure of enterprises in Nigeria by sectors and the spread across the states and all the 774 local government area. And the Central Bank of Nigeria says it has so far recovered over 60 billion naira from erring banks as excessive charges imposed on customers and has equally returned same amount to the affected customers. The CBN Director of Corporate Communications, Mr. Isaac Okorafo, said the recovery of the excess bank charges was made possible through the bank's Consumer Protection Department. The regulator also announced that it had commenced the processes for creation of 10 million jobs in the next 5 years through investment support in agriculture using 10 commodity models. It also advised bank customers to report all cases of suspected illegal or excessive charges they feel their banks might have imposed on them. Well, BC, just wondering if you've ever gotten a text message from your bank saying, oh, you're debited certain amount.
Several times, several times.
Can be very annoying, right?
It can be very annoying, but it's good to know that the central bank is working to reverse all such transactions.
Absolutely.
Now let's look at Market Street now. The Securities and Exchange Commission has asked officers and men of the Nigerian Army who have invested in the capital market to explore all available channels to protect their investments. The Acting Director General of the SEC, Ms. Mary Uduk, gave the advice, and that was during a visit to the 9th Brigade Nigerian Army in Ikeja in Lagos on Thursday. Now, the Commission says it has various mechanisms in place to protect investors, and some of the mechanisms include e-dividend, direct cash settlements, regularization of multiple subscription, and transmission of shares. Ms. Uduk says the Commission also rolled out a complaints management framework which, according to her, enables investors to know where to complain and how long it takes for such complaints to be resolved. According to her, the SEC is committed to protecting investors and will keep working on its rules and the possibility of amending them when the need arises. And the Director General of the Debt Management Office, Ms. Patience Oniha, says the country needs to increase its revenue to be able to service its loans. According to her, borrowing is necessary to finance capital projects, but the major challenge the country has is the level of revenue it's generating. She said this while answering questions during a workshop on borrowing guidelines for state governments and the Federal Capital Territory, also in Lagos on Thursday. According to her, the new borrowing by the country is in the budget and it's necessary to finance the gap or difference between the revenue and the expenditure.
All right, let's drill down the numbers. There was a reversal in the equities market yesterday. We saw a renewed bargain hunting, and all thanks to the industrial sector, the market went up 0.17%. BC has the figures. Now, the buy interest in Boa Cement, of course, contributed to that reversal we saw yesterday at the market. But the question is, how sustainable will this be?
Well, we'll see how that goes. I mean, the markets will see what direction the markets will face in a few hours from today. But let's go over yesterday's numbers. Now, after 3 days of sustained sell pressure, the stock markets made a moderate 0.17% rebound at the close of Thursday's trading session. Of course, the markets was on the verge of closing negative, but just like Chimeze mentioned earlier, investors' interest in Boa Cement drove the benchmark index higher to 27,568.91. Well, consequently, the month-to-date loss moderated to 4.4%. and the year-to-date gain increased to 2.7%. There was also a strong interest in the shares of Sovereign Trust Insurance, and that boosted the total volume of shares traded on Thursday by 67.2% to 485 million units in 4,187 transactions. Now, the 3% price increase on the NSE's third most valuable stock contributed largely to the 24 billion naira recovery in the equities capitalization, as well as a 1.66% advantage on the industrial goods counter. Well, gains were also recorded by the insurance sector, thanks to NAICOM Insurance and WAPIC Insurance. However, the oil and gas sector was down 0.86%, and that was due to losses recorded by Forty Oil and Owando. Well, all the other stocks on that counter remained unchanged. And the banking and consumer goods indices were also down 0.51% and 0.04% each. GT Bank and Jaiz Bank were among the shares that dragged down the banking index on Thursday. And at the NASD OTC market, there was not much activity as the index and the market capitalization were unchanged on Thursday, but volume was higher compared to Wednesday at 266.9, valued at 4.67 million naira in 11 deals. And to the fixed income market, now the overnight lending rate between banks contracted by 2 basis points to 4.1%, and that was as system liquidity increased, and that was due to a result of the inflows from OMO maturities worth 627.2 billion naira. We're looking at the Treasury bonds market now. That segment was bullish, as average yield contracted by 8 basis points to 10.0%, and all we saw 99 deals recorded and valued at 38.83 billion naira. And trading in the Nigerian Treasury bill secondary market remained quiet as the yields across all instruments were unchanged at 4.05%. Now, only one deal was recorded for 150 million naira value. And at the OMO secondary market, now average yield contracted by 65 basis points to 12.2%. Now, there was a lot of activity recorded in that segment of the market, with 751 deals recorded at 216.92 billion naira. Chimizi.
All right, BC, let's look at one of the sectors that seem to be catching investors' attention at this period, and that's the insurance sector, with a recent regulation by National Insurance Commission requiring insurance companies to recapitalize by June 30, 2020. That has taken another turn with the news that the regulatory body may force merger of companies struggling to meet up with a new capital base. NAICOM says it will, as much as possible, avoid going into liquidation of failed companies in the ongoing insurance industry recapitalization. The Commission said rather than liquidating those that failed to recapitalize, it is considering forced mergers that will make them become one big company. Well, the new development may be necessary as insurance penetration ratio for Nigeria remains markedly underwhelming relative to peer countries across sub-Saharan Africa and beyond. All right, joining us to discuss this is the MD CEO, Cowry Asset Management Limited, Mr. Johnson Chukwu. Good morning, Mr. Chukwu. Thank you for joining us.
Thank you, Timothy, for having me.
So how do you see the new development from NAICOM on the consideration of a forced merger?
My take is that it's most appropriate that National Insurance Commission has the fallback position as it relates to the consolidation in the industry. And that fallback position is that for those insurance companies that fail to meet the capitalization deadline of 31st of December 2020, they will force them to merge. Because as the regulator, the organization that has the capacity to issue license, they also have the power to withdraw license. And it simply means that for those that fail to meet the capital requirement, they will withdraw their license and compel them or whatever is left of those institutions to be acquired by the vibrant insurance companies. Today, we have about 55 insurance companies, including the insurance companies, the life, the non-life, the composite underwriters, the reinsurance companies, Takafu insurance companies. So, and it's not as if you say the number is too big, but you have a lot of weak or a number of weak operators in the industry that need to either recapitalize or need to be acquired.
Now, how feasible is a forced merger, especially if the shareholders of the companies concerned refuse such?
Well, as I said, that the NAICOM is the regulator. It has the power to issue license, also has the power to withdraw license. He who has the power to give life in this instance also has the power to withdraw the life. So, as it stands today, where insurance companies fail to meet the capitalization requirement, they have lost their the basis of their existence. So NAICOM will withdraw their license. And once they withdraw their license, they come under the management of NAICOM. NAICOM can now ask other companies that are strong and vibrant to acquire those other companies so that the policyholders do not suffer at the end of the day. I think what the NAICOM wants to do is to preserve the interest of policyholders as well as small shareholders and the investing public.
Now, the deadline for the new tier-based recapitalization has been slated for June 30. How would you assess the performance of most insurance companies? Do you see this leading to some closing shop is against NAICOM's wishes?
Okay, let me start by saying this. NAICOM has actually shifted the deadline to 31st of December 2020. That's about 6 months extension. What we are seeing is that a lot of foreign underwriters are interested in the country. We today have close about 10 foreign underwriters are interested in the 55 insurance companies operating in the country. We are also seeing further interest by foreign underwriters. We see a lot of them wanting to buy a stake in Nigerian companies and actually strengthen them. But beyond that, I'm also aware that a number of the local operators are looking for additional funding to recapitalize. But ultimately, you're going to see a few that may not be able to meet that deadline. But as it stands today, a lot of activity is going on in the capital structure of many underwriters. Some of them are looking for major partners. Virtually all the insurance companies have submitted to NAICOM their recapitalization plan. And NAICOM, in most instances, have come back to them to either say, look, the recapitalization plan looks logical, is acceptable to us, we have no objection to your recapitalization plan. Or in some instances, they've said to them that your recapitalization plan did not meet our expectations, and they expected them to go back and recatch and come up with a more detailed and practical recapitalization plan. The recapitalization plan, like I mentioned earlier, includes whether you're going to recapitalize, you're going to attract capital internally or externally to meet that capital requirement. Let me also mention the capital requirement. For general insurance, the new capital requirement is 10 billion. For life policy insurance underwriters, their new capital requirement is 8 billion. And for composite insurance companies, their new capital requirement is 18 billion. So for those who either meet it through their retained earnings, they are really close to that threshold, or they're going to look for new capital, or they will look for other major partners or a partner to acquire them. So these things must have been submitted to NAICOM, and NAICOM would have verified that it looks realistic, and either they gave no objection to it or they objected to it and required for a more thorough plan.
All right, Mr. Chukwu, let's talk about insurance penetration now, which remains very low here in Nigeria relative to other countries. And beyond capitalization, what other factors do you consider are major drawbacks to adequate penetration of the industry?
Well, I think there are two major drawbacks. One is the level of financial product penetration. Of course, insurance products are also part of the financial product, which has to do with the level of sophistication of the populace. People who are not educated may not really know the need, to have the need to acquire or use any of the financial products, including insurance. Two, the level of poverty, where you are talking about 94 million people are living below poverty level. They really have little or nothing to insure. So you are looking at about half of the population having little or nothing to insure, have almost what they call no insurable interest. Then the other factor is concerns about the ability of insurance companies to pay claims. People have actually had to complain in the past that some insurance companies do not pay claim or pay timeously. And these are factors that serve as disincentive for policyholders to go on and ask for writing of new policies. I think these are some of the critical drawbacks to insurance penetration in the country.
Now, you've mentioned some of the drawbacks affecting insurance penetration in the country, but in terms of their financial performance now, would you say that they are navigating the turbulent macroeconomic environment to their favor?
Well, a turbulent macroeconomic environment will never be a favor to any business operator, because we are talking of heightened risk, and the business operators want to operate with minimal macroeconomic risk so that they are dealing with only their firm risk. But you really can't run away from it. But when you have heightened instability, it worsens the prospects of any industry, and the insurance industry is just one of those industries that are affected by unstable macroeconomic policies. But having said that, we also have to look at, like I mentioned, the issue of the wealth of the citizens. Where people are very poor, you don't, of course, those who live under below poverty line, they don't have homes of their own, they don't have vehicles of their own, they have few household equipment to insure, so they really have not so much of assets, financial, economic assets as to insure, and that means they fall completely outside the area of coverage or target market for the insurance companies. So that's one aspect. And the other aspect is that where policies become convoluted and people cannot make judgments, they err on the side of caution, and they wouldn't want to take anything that is speculative in nature. Ideally, insurance products should be a kind of protection, but that's when you have the resources and you have the assets to insure. So you have, when you deal with average level of poverty, you also deal with low insurable interest.
All right, now, Mr. Chukwu, some of the insurance companies may be considering raising equity capital to meet up with the new requirement. For instance, NAICOM Insurance is seeking to raise an additional 3.5 billion naira through right issues. This is aside from the private placement it had done. Now, how accessible do you think the equities market is now, given the recent negative sentiment after the initial January effect rally?
Okay, thank you for this question. It actually brings to the fore one of the reasons why NAICOM extended the deadline from June 30th to 31st of December 2020. The basic thing is that the economic environment is not clement. It's what they may call an inclement economic environment. Not too many people are making money. Not the surplus units in this economy are thinning out. So you don't have a lot of people who have financial resources to invest in new equity offers. And that's why some people felt that the timing of recapitalization may not be most auspicious. You just mentioned an insurance company that is doing a full private placement and the right issue. Of course, the right issue at this instance will simply mean they are selling only to existing shareholders, with the hope that the existing shareholders have the equity, the resources to buy. But NAICOM is in a unique position in saying that NAICOM is largely, the major shareholder is largely, as it stands today, foreign. And they are in a stronger position to bring in money into the economy than institutions that are purely local. So when you have a significant interest by a foreign investor, it's easier for such insurance companies to raise equity, new equity, because the money is coming from outside the shore. It's not only subject to the economic pressures of the residents of this country. And like I said earlier, we have a lot of foreign underwriters who are interested in buying into Nigerian companies. And for them, they will buy cheap because the value of the currency is low, the value of the shares are low, and if you give them an opportunity to hold a material stake in these companies, ultimately, the economy will recover. And when the economy recovers, the insurance industry will still remain one of the most vibrant sectors with the strongest prospects. Like I said, the penetration is quite low. It then means that as people are getting more income, buying more assets, they have a compelling need to protect those assets from the vagaries of nature. And the insurance companies are the surest way you can protect your assets. So anybody who is taking an equity stake in an insurance company today for the future, for the long term, is making a good judgment. But unfortunately, not too many Nigerians have the financial resources to take those positions at this point in time.
Thank you, Mr. Johnson Chukwu, CEO of Carry Asset Management Limited, for speaking with us on the program. Well, how do we achieve gender equality at the workplace? That's our next conversation after the break. Do stay with us.